Breville classifies their expenses by function, and this is why. To classify expenses in an income statement, they can be by nature or by function. If you classify by nature, it means the expenses are disclosed by the categories that they fall under. These are larger, more broad categories of expenses such as raw materials, depreciation, staff cost, and transport, etc. This is usually used by small businesses that is trying to just make a summarized and not extremely detailed income statement. Whereas expenses that are classified by function, this is more so the opposite, as expenses on the income statement are disclosed by more specific terms and their actual functions that they play. This is used such as cost of goods sold or administrative expenses. Breville's expenses are classified by function because they're more specific and define the expense by its function. This can be shown in the 2020, 2021, and the 2019, 2020 annual report, as their income statement has cost of goods sold, employee benefit expenses, and even advertising expenses. Having the cost of goods sold enables Breville to calculate their gross profit, which is something that's only able to be done when expenses are classified by function and not by nature, so therefore show that Breville's expenses are classified by function. To talk about the other comprehensive income, at the end of the financial year, Breville obviously ends with a net profit after income tax for the year. This is a figure that is calculated without the inclusion of other comprehensible income. Other comprehensible income is the income that is yet to be realized and therefore excluded from the income statement. The two other comprehensible income that is shown on Breville's income statements for both the 2021 and the 2019 income statements is foreign currency translation differences and net change in fair value of cash flow hedges. And then on top of these two, also the tax that revolves around both of them. In 2019 and 2020 annual report, the total comprehensive income was an addition of only $62, whereas in 2020-2021 annual report, it was a loss of $9,884, showing that this figure can vary each year and changes.
Breville Group Limited is a public listed company that operates in global product and distribution. Global Product sells premium products designed and developed by Breville that are sold globally. Distribution sells products that are designed and developed by a third party, which are distributed by Breville under license and distribution agreement. They are currently located in Australia, New Zealand, North America, Hong Kong, and the United Kingdom, with the head office in Alexandria, New South Wales. They are currently operating in two industries, F3494B, household appliance wholesaling in Australia, and F3733, kitchen and dining wholesaling in Australia. In terms of financial performance, the return on revenue ratio measures the company's profitability based on its revenue. Breville has incurred a return on revenue of 6.7% for the year ending 2020 and 7.7% for the year ending 2021. The increase in return on revenue is a positive increase for the business, as it means that for every dollar of revenue, 77 cents is net income. This increase in return on revenue is an indication that Breville is maximizing its income per unit of revenue. Return on equity is a measure of the company's profitability in relation to its equity. Return on equity has increased from 2020 to 2021 from 15.4% to 18% respectively. Once again, this is an improvement for the business as its shareholders receiving a higher return compared to 2020. This can entice more investors as Breville has an increasing return on equity. Return on assets is a profitability measure in relation to the company's assets. Breville's return on assets has also increased from 2020 to 2021 from 10.1% and 11.8%. This figure means that for every dollar invested in assets generates 11.8 cents of net income. Overall, Breville's financial performance has improved from 2020 to 2021 due to return on revenue, return on assets, and return on equity increasing. We can conclude that the business's profitability is improving as they are making more income per dollar of revenue, asset, and equity invested.
Hello, please introduce yourself.
Hey, my name is David Yun.
Hi, David. So today we'll be talking about the lease agreements within the Breville Group. With
Yep.
the new lease accounting standard AASB 16 making AASB 117 obsolete. So what is AASB 16?
Perfect. So, the core principle around the new accounting method standard, which is AASB 16, is that an entity shall recognize assets and liabilities arising from a lease. But to expand on that, what is a lease? So, a lease exists when a customer controls the use of an underlying asset which provides the business economic benefits and directs the use of the asset through the period of use as well. But if the period is less than 12 months, then instead of being recognized as a lease, it will be recognized as an expense instead.
So can you tell me who are the parties involved?
Yeah, so there are two parties involved in a lease contract. The first one being the lessor, which is the party providing the asset, and will be receiving payments at established dates as well. The other party is the lessee, the party who's acquiring the right to use the asset, and they're obligated to pay the lessor at established dates. Now, according to Breville, on the annual report, they state that they do not act as a lessor under any circumstances, so only as a lessee.
So David, can you tell me what effects does the new accounting standard have on the Breville Group?
Yeah, so I like to break it down. I'll break it down to different classes for you, starting with assets. So previously in the old accounting standard, in AASB 117, operating leases is a contract that allows for the use of an asset, but does not convey ownership rights of the asset. These are not included in the balance sheet, which therefore keeps the ratios, for example, debt to equity ratios low. But now, these leases would now be a part of the balance sheet, affecting the different accounting categories. So if we take a look at the 2019 annual report, we can see that the consolidated amount of operating lease commitments that's more than 12 months is a total of about $23 million. Now, this amount is now something to be considered into the new 2020 annual report when mentioning assets. So let's take a look at the 2020 annual report. We are able to see amounts recognized as an asset under the subcategory right of use assets. So buildings held up a majority of the amount at about 17 million and vehicles at about 12,000. So these amounts, as mentioned before, will gross up the assets on the balance sheet.
And what about liabilities?
Yeah, so previously in AASB 117, many of leases were not represented on the entity's balance sheet, as well as the requirements for recognition of leases were way too complicated. Now, liabilities under AASB 116 will now be less complicated, and leases will be represented in a statement of financial position. Now, the liability would be for lease payments that are economically unavoidable over the lease term agreement. For the definition of lease payments, it's fixed payments, and if mentioned in the contract, any residual value guarantee or price of a purchase option as well. As of the 2020 annual report, from lease liabilities, Breville now has a total of 24 million recognized, whereas before this, it would have been recognized just as an expense. So having both assets and liabilities change and increase, they change the risk profile of the company as well.
Last but not least, David, does it affect anything else?
Yeah, of course. As mentioned earlier, with both assets and liabilities increasing, profits of course get impacted as well. So Breville saw an increase to the net profit after this change. So after the income tax and all that for the financial year 2020, they saw an increase of about $0.5 to $1 million. So we can see the importance of this. So just in the change of how leases are recognized, now Breville in the financial report can state that the net profits have increased. That's all for today, guys. Thank you for your time.
Hello, please introduce yourself.
Hey, my name is David Yun.
Hi, David. So today we'll be talking about the lease agreements within the Breville Group. With
Yep.
the new lease accounting standard AASB 16 making AASB 117 obsolete. So what is AASB 16?
Perfect. So, the core principle around the new accounting method standard, which is AASB 16, is that an entity shall recognize assets and liabilities arising from a lease. But to expand on that, what is a lease? So, a lease exists when a customer controls the use of an underlying asset which provides the business economic benefits and directs the use of the asset through the period of use as well. But if the period is less than 12 months, then instead of being recognized as a lease, it will be recognized as an expense instead.